The markets right there, there's not very much by way of change. The Nifty's got 16 points. The Bank Nifty is down about 1/3%. Metropolis Healthcare IPO is going to open on the 3rd of April, that is next week, wherein the diagnostics company will look to essentially raise about 1,200 crore rupees. The price band is set at between 877 to 880 rupees a share. Both Carlyle Group and the Shah family, the promoter group, will divest their stake.
Part of their stake.
Part of their stake, yes. Yes, of course. I mean, which promoter sold out, right?
just clarifying, yeah.
Ameera Shah is managing director at Metropolis, and this is what she had to say on the funding requirement and expansion plans at the company. Listen in.
Our expansion plans, as far as our whatever small capex investment that we need to do for maintenance capex, we are able to create that from our own internal cash flow. So there is really not a requirement for external funding. See, last year we generated about 110 to 115 crores of free cash flow, maybe a little bit more also. Usually our maintenance capex is not more than 10 to 20 crores a year. We use the balance for acquisitions, smaller acquisitions. Which is what we've been doing for the last many years. As you'll see, Metropolis has been quite prolific on acquisitions. We have the ability and the risk-taking appetite to do it. If you see in 17-18, our margins were about 27.8% EBITDA and about 17% PAT. We feel reasonably comfortable with these margins. Currently, we're at 43% B2C revenue contribution, and we are trying to take this to 60%. Okay. And we believe that by doing so, it will create a great amount of operating leverage for us.
Okay, well, on that note, let's get in some F&O strategies. Krish Subramanyam is with us. Krish, what are you recommending? Last day of the trading week, what would your strategies be?
Yes, Ekta, I think we have had a stellar mass series and the Bank Nifty, Nifty rolls have been pretty decent. But I think near term, we could again see some sort of correction. So keeping that in mind, recommending a ratio bear spread when one could buy a 30,300 strike put in the Bank Nifty that's quoting around 308, and also sell 2 lots of 29,700 strike put. So the net cost comes to about 88, but the maximum one would gain is about 512 bips, and also recommend a stop loss of 40. And on stock specific, the pharma seems to have seen some decent rolls. So a couple of counters which caught the eye one was Wockhardt, and the second one was Cipla. Cipla seems to say that many of the shorts might not have got rolled over for the April series. So we could see some upside. Recommending buying of a plain vanilla call, 540 strike call. That's quoting at around 10 rupees, keeping a target of 18. Also, one could keep a stop loss of 5. And the last one is a sell recommendation on Amar Raja. I think a lot of shorts have got rolled over in many of these auto ancillaries. And Amar Raja is no exception. So one could possibly sell this for a possible target of 707. But I also recommend a stop loss of 738.
Okay, Krish, thanks very much. Appreciate you joining in with that opinion and those F&O trades. It's a wrap here on this edition of Trading Hour. From Ekta, me, everyone on the team, thank you very much for staying with us. More coming up on Halftime Report after a quick break.